Most traders believe they need mentors, communities, and constant market chatter to succeed. They join Discord servers, follow 20 different analysts, and surround themselves with noise thinking that's how you learn to trade. But here's what nobody tells you. The best traders I've studied weren't shaped by crowds. They were forged in isolation. Miyamoto Musashi, the legendary samurai who won over 60 duels, spent most of his life alone. Not because he was antisocial, but because solitude was his competitive edge. While others relied on validation and group consensus, Musashi developed unshakable conviction through introspection. In trading, this principle is brutal but true. The market rewards independent thinking, not popular opinion. Today, I'm going to show you why your reliance on trading communities might be the exact thing keeping you from developing real edge, and how strategic solitude can transform you from a reactive trader into someone who actually understands their own decision-making process. This isn't about isolation, it's about clarity. Let's talk about the power of the lone trader. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Let me show you what mental solitude actually looks like in practice, because most traders completely misunderstand it. They think it means turning off their phone and staring at charts in silence. That's not it. Mental solitude is a self-imposed state of mind where you've trained yourself to mute the constant chatter of the external world even when it's screaming at you. Picture this. Bitcoin drops 5% in 20 minutes. Your Twitter feed explodes. 15 analysts you follow are calling it a bull trap. 3 are saying it's the dip to buy. Your Discord server has 47 messages in the last 2 minutes. And here's what happens to most traders. They absorb all of it. They let every opinion, every hot take, every conflicting signal pour into their decision-making process until they're paralyzed or worse. They make a trade based on the loudest voice in the room rather than their own analysis. Musashi understood something crucial. The external world will always try to influence you, and if you let it, you'll never develop your own vision. He wasn't disconnected from society. He interacted with other warriors. He understood the political landscape of feudal Japan, but when it came time to step into a duel, when life and death hung in the balance, he relied solely on what he had cultivated within himself. No council of advisors, no second opinions, just his training, his observation, and his conviction. In trading, you need the same discipline. The market doesn't care about consensus. It doesn't reward the person who collected the most opinions. It rewards the trader who can see clearly when everyone else is drowning in noise. Here's your practical implementation. Create a blackout period 30 minutes before and after your execution window. During this time, no social media, no news feeds, no analyst calls. Just you, your chart, and your pre-written plan. This isn't about being uninformed. You've already done your research. You've already built your thesis. This blackout period is about protecting your execution from contamination. Because once you're in that critical window where you need to act, every external input becomes a liability. You've done the work. Now you need the clarity to execute it without second-guessing yourself. Because some talking head on CNBC just said the opposite of what your system is telling you. But here's where it gets deeper, and this is where most traders fail, even when they think they're being disciplined. They'll turn off Twitter, close Discord, silence their phone, and then they'll still make impulsive trades. Why? Because they're acting on what Musashi called a partial feeling. This is the principle that demands you never act on transient emotions or incomplete conviction. Retail traders do this constantly. They'll see a candle, break a level, and feel that surge of excitement. This is it. This is the breakout. And they're in the trade before they've verified anything. Or they'll see price approaching their stop loss and feel that knot of fear in their stomach, and they'll exit early, right before the trade works. These are partial feelings, incomplete emotional responses masquerading as trading decisions. Musashi wrote that you should not under any circumstances depend on a partial feeling. He demanded that actions be thoughtfully made, fully conscious, and independent of fleeting influences. In dueling, a partial feeling could get you killed. You can't swing your sword because you feel nervous or because you sense something might happen. You swing when the moment is right, when all the conditions align, when your training and observation converge into certainty. Trading requires the same standard. Every entry must be backed by objective criteria, not by the emotional weather passing through your mind at that moment. So here's your filter. Before every trade, you need a pre-written checklist, not a vague set of guidelines, but specific, measurable conditions that must be met. When you feel that pull to enter a trade, and you will feel it, that's human, you pause and you check. Are all the conditions met? If the answer is no, if even one criterion is missing, the trade is discarded. No exceptions. No, but this time feels different, because that feeling is exactly what Musashi warned against. The master trader isn't the one with the best instincts. It's the one who has eliminated the gap between instinct and system, who has trained themselves so thoroughly that feelings and criteria align. Until you reach that level, you trust the checklist, not the feeling. Now let me address something that destroys more traders than bad strategy ever could: ego attachment to outcomes. Musashi taught his students to think lightly of yourself and deeply of the world. This is profound when applied to trading. Most traders do the exact opposite. They think deeply about themselves, obsessing over every tick of their P&L, and lightly about the world, barely observing what the market is actually doing. When you tie your self-worth to a trade's outcome, your judgment becomes clouded. A winning trade makes you feel like a genius. A losing trade makes you feel like a failure. And both of those emotional states destroy your ability to see clearly. The market doesn't care about your ego. It's going to do what it does, regardless of whether you need this trade to work to prove something to yourself or to make back what you lost yesterday. When you're thinking deeply about yourself, about what this trade means for your account, your confidence, your identity as a trader, you're no longer observing the market objectively. You're watching your reflection in the water instead of watching the actual currents. Musashi turned his focus outward, observing the world with intense clarity, while maintaining a humble sense of self. He removed ego from the equation, which gave him the ability to adapt, to respond to what was actually happening, rather than what he wanted to happen. Here's how you implement this practically. Use a fixed risk model, where the dollar amount is already lost the moment you place the trade. If you're risking $200 on a trade, that money is gone before you hit the order button. It's already been paid as tuition, as the cost of participating in the market. This mental frame shift is crucial because it allows you to observe the market's behavior without emotional bias. You're no longer desperately hoping the trade works because you need that money. You're simply watching to see if your thesis plays out. The money is already gone, so now you can focus entirely on the data the market is giving you. Does price respect the level you identified? Is volume confirming the move? Are you seeing follow-through or exhaustion? These are the questions of someone observing deeply while thinking lightly of themselves. And if you're finding value in this approach to trading, if this framework is making you reconsider how you've been operating, take a moment to subscribe to Trader's Bible and turn on notifications. This channel exists as a quiet room for market mastery, where we strip away the noise and focus on what actually builds edge. The algorithm won't show you this content unless you tell it to. Make sure you don't miss the next piece. Let's talk about radical self-reliance now, because this is where traders reveal whether they're serious or just tourism in the markets. Musashi's Dokodo, the path of walking alone, included the principle of not seeking pleasure for its own sake. In trading terms, this means finding satisfaction and validation within your own process rather than external results or the approval of others. Most traders are pleasure seekers without realizing it. They chase the dopamine hit of a winning trade, the social validation of posting screenshots, the feeling of being right when their prediction comes true. But none of that builds lasting skill. You cannot copy your way to mastery. You cannot follow signals from someone else and develop genuine edge. Every time you defer to someone else's analysis, you're preventing yourself from building the neural pathways that create independent judgment. Musashi was a ronin, a samurai without a lord, without a master to serve. He walked his own path. In trading, you need to become a ronin too. Not because mentors have nothing to offer. Musashi himself learned from other warriors early in his life, but because at a certain point, you need to stop outsourcing your conviction. You need to develop a feedback loop that relies solely on your own observations, your own data, your own mistakes and corrections. This is where journaling becomes non-negotiable. Not the surface level, I took a long at this price because I thought it would go up. Nonsense! Real journaling means documenting your thought process before the trade, during the trade, and after the trade. What did you see? What did you expect? What actually happened? Where was your judgment accurate? Where did it break down? This is how you build self-reliance, by creating a private laboratory where you conduct experiments and analyze results without anyone else's interpretation contaminating the data. Over time, you'll start to see patterns in your own decision-making. You'll notice that you trade better at certain times of day, that you have a blind spot with certain setups, that your risk management falls apart when you're trying to recover from a loss. None of this wisdom comes from a trading community. It comes from the solitary work of understanding yourself. Now here's something most traders never consider. The clutter in your trading setup is a direct reflection of the clutter in your mind. Musashi advised to not hold on to possessions you no longer need. This wasn't just about material objects. It extended to relationships, habits, and thoughts that no longer served him. In trading, we accumulate so much unnecessary weight. Indicators we added 6 months ago that we don't even look at anymore. News feeds we scroll out of habit, but that provides zero edge. Biases from trades we took last quarter that have nothing to do with current market conditions. All of this is temporal attachment, and it ruins your execution. I see traders with 15 indicators on their chart convinced that more tools equal better analysis. But a cluttered chart leads to a cluttered mind. You can't see clearly when your screen looks like a bowl of spaghetti. Every extra line, every additional oscillator, every supplementary data point is a decision you have to make, a place where your attention gets divided. Musashi fought with minimal equipment, 2 swords, and his skill. He didn't need 73 weapons. He needed mastery of the essentials. Your trading should reflect the same principle. Conduct a weekly mental and physical declutter. Go through your charts and remove any indicators you didn't actively use in your decision-making that week. Unfollow accounts that provide more noise than signal. Delete old trade ideas that are anchoring your perception of current price action. This isn't just about keeping things tidy. It's about removing the superfluous, so you can focus on what actually creates edge. The trader who can act decisively with 3 pieces of information will always outperform the trader who's paralyzed by 30 conflicting signals. And this brings us to the final principle, the one that separates consistent traders from chronic underperformers: fearless execution. Musashi wrote, "Do not fear death," which sounds dramatic until you understand what he meant. This wasn't a call to be reckless. It was an encouragement to live fully and fearlessly, with the understanding that death is a natural part of life. In trading, your stop loss is death. It's the loss of capital, the end of that particular trade's life. And most traders fear it so intensely that they sabotage themselves. Think about how many times you've hesitated at the moment of entry because you were afraid of being wrong, or you've moved your stop loss further away because you couldn't bear the thought of taking the loss. Or you've exited a trade early because you were terrified of watching profits disappear. All of this is fear of death, and it's destroying your results. Hesitation at the moment of entry is the primary cause of missed opportunities and poor risk-to-reward ratios. When your system says enter and you freeze, you're not being cautious. You're being controlled by fear. The solution is to fundamentally reframe what a stop loss represents. It's not a failure. It's not a judgment on your skill. It's a necessary business expense, the cost of being in the game. Every successful business has operating costs. A restaurant pays for ingredients even when a dish doesn't sell. A manufacturer pays for materials even when a product doesn't move. Your stop losses are the cost of operating in the market. When you accept that this cost is inevitable and necessary, the fear evaporates. You're not afraid of the stop loss any more than a restaurant owner is afraid of buying tomatoes. It's just part of the process. Treat every stop loss as already spent, and suddenly your execution becomes flawless. You can enter when your system signals, because you're not risking your entire identity on the outcome. You can hold through volatility, because you're not emotionally attached to every tick. You can exit cleanly when you're wrong because you already accepted that possibility before you entered. This is what fearless execution actually looks like. Not the absence of fear, but the complete integration of risk into your framework, so that fear no longer has power over your decisions. But here's what ties all of this together, and it's the piece most traders miss. The lone trader isn't actually alone in the way you think. They're not isolated from information or disconnected from reality. What they've mastered is something far more valuable. They've learned to be alone with their own judgment, and that's a completely different skill than what most trading education teaches you. When Musashi walked into a duel, he carried with him everything he'd learned from other warriors, from his own victories and defeats, from years of observation. He wasn't pretending that knowledge didn't exist, but in the moment of action, he had synthesized all of that into his own understanding. It wasn't Musashi reciting someone else's technique, it was Musashi expressing his own mastery. The same principle applies to your trading. You're not trying to reinvent technical analysis or pretend that market structure doesn't exist. You're taking everything available to you and filtering it through your own testing, your own experience, your own observations, until what emerges is genuinely yours. This is why two traders can look at the same chart and see completely different things, and both can be profitable, because they've each developed their own lens, their own way of interpreting information. The trader who's still dependent on external validation hasn't developed that lens yet. They're looking through someone else's eyes, and that's why their conviction crumbles the moment price moves against them. They don't really believe the trade will work. They're hoping the person who gave them the signal was right. That hope is not enough to sustain you through the inevitable drawdowns and psychological pressure of trading. Here's what actually happens when you commit to the path of the lone trader. Initially, it feels wrong. You're going to close Discord and immediately feel like you're missing something important. You're going to ignore the hot take on Twitter and worry that everyone else knows something you don't. You're going to pass on a trade because it doesn't meet all your criteria, and then you'll watch it work without you. And you'll question whether your system is too rigid. This discomfort is not a sign that you're doing it wrong. It's a sign that you're doing it right. You're building new neural pathways, training yourself to trust your own process over the crowd's opinion. The crowd is often right in hindsight. That's the trap. You'll see people celebrating trades they called, posting their wins, talking about how obvious the move was. What you don't see is the 20 other calls they made that went nowhere. You don't see the internal contradiction in their analysis from one day to the next. You don't see how their confidence is performance rather than genuine conviction. When you're plugged into that noise constantly, you're training yourself to react to confidence instead of analyzing probability. You're teaching your brain to follow volume. Whoever's talking loudest must know something, rather than developing your own signal detection. Musashi spent years in solitude, not because he hated people, but because he understood that mastery requires separation from the need for constant feedback. Every time you seek validation, you're interrupting your own development. You're asking someone else to confirm what you should be learning to confirm for yourself. And I know what you're thinking, but what if I'm wrong and I keep going in the wrong direction? That's a legitimate concern. And here's the answer. You will be wrong, repeatedly. That's non-negotiable. The question isn't whether you'll be wrong, it's whether you'll learn from being wrong. This is where the journaling practice becomes your competitive advantage. When you're documenting everything, your analysis, your emotional state, your execution, the outcome, you're creating a feedback mechanism that's far more valuable than any mentor could provide. Because a mentor can tell you what they see in the market, but they can't tell you what's happening inside your own decision-making process. They can't identify the specific psychological patterns that cause you to overtrade or exit early or revenge trade. Only you can see that, and only if you're paying attention. The lone trader develops something that the community-dependent trader never acquires: internal calibration. You start to know, not think or hope or believe, but actually know when you're trading well versus when you're forcing trades. You can feel the difference between genuine conviction and wishful thinking. You recognize when you're being patient versus when you're being passive. These distinctions are invisible when you're constantly seeking external input, because you're never quiet enough internally to notice the subtle signals your own psychology is sending. Let me give you a concrete example of how this plays out. Two traders are watching the same consolidation pattern. Trader A is in 3 Discord servers, following 20 analysts on Twitter, and checking a trading forum every 15 minutes. They see mixed opinions. Some people think it's going to break up, others think it's breaking down, a few think it's going nowhere. Trader A absorbs all of this, tries to synthesize it, and ultimately makes a decision based on which voice they found most convincing in that moment. They enter the trade with borrowed conviction. Trader B has the same information available, but has chosen mental solitude. They've done their analysis, identified the conditions that would confirm a breakout, and written down their entry criteria. They're not checking what anyone else thinks, because they've already done that work during their research phase, outside the execution window. When price action starts to develop, Trader B is watching pure data, volume, how price responds at the level. Whether the breakout is clean or choppy, they're not filtering this through 12 different opinions. They're just observing. When their criteria are met, they enter. When they're not met, they don't. Now here's what happens next. The trade goes against both of them initially. Trader A immediately checks Discord to see if anyone else is feeling nervous. They see someone say, "This looks like it's going to fail," and their conviction evaporates. They exit for a small loss. Trader B feels the same nervousness. They're human, they have emotions, but they're not acting on the partial feeling. They check their plan. Does this invalidate the thesis? Has the stop been hit? No? Then they hold. The trade eventually works. This happens over and over, and the gap in results compounds. It's not that Trader B has better analysis. They might be using the same technical concepts as Trader A. The difference is execution certainty. Trader B has learned to be alone with their judgment, to sit in the discomfort of uncertainty without immediately reaching for validation. That skill is worth more than any strategy you'll ever learn. But here's the nuance that most people miss when they hear about the power of solitude. Strategic isolation doesn't mean permanent isolation. Musashi wasn't a hermit for his entire life. He had periods of intense solitude and periods of engagement with the world. The key is intentionality. He chose when to be alone and when to interact based on what served his development. You need the same awareness in trading. There are times when external input is valuable. When you're learning a new concept, when you're testing a strategy and want to see how others have approached it, when you're researching a market you're unfamiliar with, these are appropriate times to gather information. But you gather it with intention, process it independently, and then test it yourself. You don't outsource the thinking. And once you're in execution mode, once you're managing live positions, that's when the door closes. That's when you need to be completely alone with your process. The traders who struggle with this usually fall into one of two camps. The first camp treats trading like a social activity. They're in it for the community, the camaraderie, the shared experience. and there's nothing wrong with wanting connection. Humans are social creatures, but trading itself is not a team sport. Your P&L is yours alone. The market doesn't care about your friendships or your group consensus. If you're treating trading as primarily social, you'll never develop the self-reliance required to succeed. The second camp swings too far in the other direction. They isolate completely, refuse to learn from anyone, reject all external information because they think that's what independence means. But that's not solitude. That's ego. Musashi learned from other warriors. He studied different sword schools. He absorbed everything he could. But then he went away and integrated that knowledge into his own understanding. He didn't reject learning. He rejected dependence. The path forward is clear. You need to build your foundation through study and research, gathering all the information that's available. You need to test everything yourself, not just accept it because someone credible said it works. You need to document your results obsessively, so you're learning from your own data. And then, when it's time to execute, you need to trust what you've built. No checking Twitter mid-trade. No asking Discord if you should hold or fold. No seeking reassurance that you made the right call. Just you, your plan, and the discipline to follow through. This is uncomfortable because it makes you responsible. When you're following someone else's calls, you can blame them when it doesn't work. When you're acting on crowd consensus, you can tell yourself everyone was wrong, not just you. But when you're the lone trader, when you've made the decision independently, there's nowhere to hide. You own the outcome completely, and that's exactly why it works. Because ownership creates focus. Accountability creates growth. When you know that no one else is responsible for your results, you start paying attention in a completely different way. The question you need to ask yourself is simple. Are you willing to be uncomfortable in service of actual development? Because that's what the path of the lone trader requires. Not isolation for its own sake, not antisocial behavior, not arrogance about your abilities, just the willingness to sit with your own judgment, to trust your own process, and to learn from your own mistakes without immediately looking for someone else to tell you what went wrong. Musashi understood that the warrior who could stand alone had a power that no army could provide. In trading, the same principle holds. The trader who has developed genuine self-reliance, who has built their edge through solitary work and honest self-assessment, has something the crowd-dependent trader will never possess: unshakable conviction. And in a game where your worst enemy is your own doubt, where hesitation costs you money and opportunity, conviction is everything. So here's your challenge moving forward. Implement one element of strategic solitude this week. Maybe it's the 30-minute blackout window around your trades. Maybe it's the commitment to journal every trade without asking anyone else for their interpretation. Maybe it's removing 5 indicators from your chart and learning to see more with less. Start somewhere. Because the path to trading mastery isn't found in the noise of communities and constant connection. It's found in the quiet space where you finally learn to trust yourself. You came here thinking you needed more connections, more mentors, more voices telling you what to do in the market. That's what everyone sells you. Community, group chats, signal services. But what you've learned today is the opposite. Your best trading will emerge not from collecting more opinions, but from cultivating the discipline, to think independently when it matters most. We covered mental solitude, the practice of muting external noise during execution so you can see the market clearly instead of through the lens of crowd emotion. We talked about killing the partial feeling, that dangerous impulse that makes you trade on excitement rather than objective criteria. You learned why thinking lightly of yourself and deeply of the market protects you from ego-driven decisions that destroy accounts. We explored radical self-reliance and why journaling your own observations builds more edge than any signal channel ever could. And we examined fearless execution, reframing your stop losses as business expenses rather than personal failures. The lone trader isn't isolated from knowledge. They've simply learned to be alone with their own judgment. They've done the work to synthesize information into genuine conviction. And that conviction is what allows them to execute when others hesitate, to hold when others panic, and to exit cleanly when their thesis is invalidated. All without needing someone else to tell them they're doing it right. Musashi won over 60 duels not because he had the best teachers or the biggest support system. He won because when he stepped into the circle, it was just him, his training, and his unshakable trust in what he had built through solitary practice. Your trading can operate on the same principle. The question is whether you're willing to walk that path. Thanks for being here in this quiet room for Market Mastery. I'll see you in the next one.